Memorial Day this weekend is the official start of summer travel, and taking a look at some of the outperformers in the market today, airline stocks leading the way. You can see it on your screen with American Airlines, United, Delta, among the names in the green today. So let's talk about what this means for the upcoming travel season when it comes to airlines. We want to bring in James Gellert. He's the CEO of Rapid Ratings. And James, we know airlines have been gaining some momentum. It was an extremely tough 2020 for the industry. But when you take a look, yes, there is some optimism around the progress that's been made over the last couple of months. But the key questions here is whether or not the carriers have enough time and whether or not they have enough liquidity to recover. What do you think?
Well, yeah, I think the question is how long is it going to take for the recovery in the industry to actually take hold and for them to start to get to a sustained period of cash flow break even. Q1 was a tough quarter for them, but there were some positive signs in terms of load factors coming up a bit each month. There's a hope and an expectation in the industry for a break even Q2 and cash flow positive position in Q3. All of that depends on a lot more travel than we've had in the past, and these airlines, as you rightly said, have been really beaten up over the last year. So it's going to take a lot more than a Memorial Day weekend surge to get the entire industry back on track.
James, good to see you. We should point out that Rapid Ratings actually does, I guess I would describe it as risk assessment to determine not whether it's actually going to happen, but the risk of, like an airline perhaps, not being able to make its debt payments in the future. Would that be the correct way to surmise what you do?
Yeah, that's a big part of it. We also are looking at the longer term core health of every company that we rate, and we rate hundreds of thousands of companies around the world, public and private. But in any case, we are looking at the long term perspective, whether a company is solid enough, resilient enough to withstand shocks, how efficiently is it run, and then what the short term 1 year default probability perspective is. And that's called the FHR, the financial health rating.
Right. And that's the short term. So when you look at the financial health rating, I think it's any score below 40 is just a kind of a red flag to look at. Doesn't mean it'll happen, but it's something to look at. Where do the airlines stand? And as I'm asking you that, I mean, I'm looking at a document from an investment bank that talks about short interest on the airlines, and almost all of them are in a much better position, according to investors who are shorting the stock, than they were, say, a year ago. What are you seeing?
Well, so look, every one of these companies has really come down in ratings. You had, with the exception of American Airlines, all of the big U.S. carriers were rated on our 100-point scale between really 70 and 85, 86 a year and a half to 2 years ago. Those ratings started to come down precipitously last year, and you've got the majority of them rated in the 20s and 30s, with the highest being Southwest at a 40. So 40 and below is where the majority of companies have failed over the past 20 years. That does not mean each one of these companies is going to fail, but what it does mean is that the short-term risks of these companies have increased dramatically. Counterbalancing that is the fact that they have been on an absolute tear in raising capital. And if you look at the debt profiles of these companies, their leverage has increased. I'm talking about the top 4 U.S. airlines. Their leverage has increased in the last year by 1.5 times. Their cash to current liabilities has increased by 3 times. And their short-term debt to long-term debt has decreased by about 85, 86%. So all of that speaks to an incredible amount of liquidity gaining and preservation as an attempt to buy more time. And that's really what all of these companies need to do, is have more time until the market rebounds. There are a lot of factors there. There are a lot of variables, and it is not a foregone conclusion that the market will rebound enough to save all of these businesses. But they do have enough liquidity to go for the better part of the next 12 to 24 months without a real risk of bankruptcy, unless that's a strategic decision any one of them might want to make.
And James, you mentioned the fact there that there was silver line here on external factors. If you're one of these CEOs or one of the executives leading this company, I'm curious just to get your thoughts just on to what extent this complicates some of those matters and complicates maybe the playbook that some of these airlines have laid out here over the next several months or even over the next couple of years, because they're so reliant on the broader economy coming back.
Yeah, it's a tricky situation for these for all of these businesses, because they've kind of played all of the plays that they have in the book. They've securitized their frequent flyer programs. They've securitized the majority of their assets. For some of these carriers, they have between 75 and 90% of their assets are already secured. So it's very hard to borrow more money after all of your assets are effectively pledged. So that's going to give them very little flexibility as we go forward, if indeed they need additional capital. Adding to that, we're still in the most advantageous and easy access to capital market that we've had in any of our corporate history, any of our business histories. So that means going forward, there's really only one direction to go, and that is a more difficult time raising capital. And as interest rates creep up over the next couple of years, the capital will also be more expensive. So if the market doesn't rebound enough that these companies can be self-sufficient, and in a year to 2 years' time, they need to start raising capital again, the markets have to be there for them, or they're really going to be in a pinch.
Well, investors seem to like some of these names today. Again, some of the airliners are the outperformers in today's market. James Gellert, always great to speak with you, CEO of Rapid Ratings.